It is Saturday, March 14th. Let's look at gold, silver, and the miners, but not in that particular order. Let's do it in reverse order. Start with the miners. Agnico Eagle Mines, new historic high this month, 255, but we've seen a massive downward swing. We're down $43, 17.4% on the month. That is biggest, it's the biggest dollar drop in the history of the stock. This candle is, you think, with another 12 trading days left to go, is this candle going to turn bearish engulfing? If it does, then there's no way in hell that the 10 MA is going to hold. In which case, what are we looking at here? What are we looking at here, really? I mean, really? $100? If a 10 MA gets taken out, then you're looking at a retrace from here of that. I guess if you start the clock or the price around there, 60 to 206, 255. I mean, yeah, if that goes, there isn't anything, there's no support here. You understand that, right? There's no support. Nothing. Nothing at all. Zero. I mean, is that support level there? 78. 78. That's almost 65% down. The cautious will have very tight stops right now. If you haven't already been stopped out, I mean, the last line in the sand is 170, but that's another $37 down. Who wants to suffer another $37 loss and then I guess, worst case, you get kicked out and then stock rebounds off that? That's always possible. But if I'm right about the S&P going under 6,000, then that's not going to hold. It's not going to hold. Momentum started to tick down. It's still very positive, but bearish. First Majestic Silver. Oh my God. Yeah, by the way, I'm looking at these for the first time. I don't do like a preview before I do a video. This is, look at this horror. 29.5% down. It's not going to be bearish engulfing candle because we didn't clear the high, but this is horrible. Look at the next support. Look at the 10 MA. 15s, that's $7 down. Momentum started to weaken. The cautious will be out. Anglo Gold Ashanti. Now that did take out a new historic high, 127, but it's not going to take much to get a bearish engulfing candle, in which case there's no way the 10 MA's got to hold. And you're looking at what? What are we looking at? $40? $40 back to here. Why wouldn't you expect that? If the 10 MA doesn't hold, there is nothing but empty air. That's a massively important phrase. It's just empty air. There's no support. There's nothing. Nothing at all. Nothing at all. Horrible. Barrack Mining, 16.5% down. We did break above last month's high, so we have a bearish engulfing candle. Zero sign of a floor. Next support 35. Under that, 27. Momentum has rolled over. Core mining, 25.5%. Another one that's borderline bearish engulfing candle. Under the 10 MA 15s, support is around 12, which is $8 down. That's about 40%. 40% viable downside. DRD gold, borderline bearish engulfing candle. Horrible. 21.7%. Under the 10 MA 25s. What's the support? 17s, 13s, 12s. Cautious will be out. Endeavor Silver, another one, 28.3%. 10 MA 8s. Then the support will be in the 7s, more likely 6s. This looks like it's going to go to $6. And look at the spike. Look at the spike. The spike was the real sell signal, and that was in January. Just like there and there and there. Nobody cares. Franco Nevada, near a strike high, but now it's down 10%. Support 209. Goldfields. Look at the spike in January. Exhaustion spike 59, down 20% already. 10 MA support 39. Under that, 24s. Heckler. Look at the exhaustion spike in January 34. It's already in the 19s. 10 MA support 14s. Under that, 10 to 9. So yeah, my guess on this is going to go. If the S&P loses 6K, there's no way this is not going to go down to 10 to $9. And people then be saying, "Oh my God, why didn't we sell at 34 or even at 20, 26, 24-ish or 20?" I mean, you could sell at 20 and buy back around 10 probably. Again, I don't have a time machine, but there's your sell signal in January. February was a bounce, but we have a full reversal now. This is horrible. Harmony. Look at this. Again, it's the same thing. January, exhaustion spike. Bullish in February, but lower high. And now we have a monstrous downside reversal of 33.5%. And we're under this is one of the few first stocks that I've noticed is now under the 10 MA. So 15s, where's the next support? I mean, 13s, 14s, 12s. And considering the break, what are we looking at here? 7s, maybe? Yeah, look at the monthly. We're going to get a bearish cross in as of April the 1st. That's a problem. That's a really big problem. This one's more bearish than just about anything out there right now. Kinross Gold, which we broke above the Friday high, above the February high, but we're below the February high. We have a bearish engulfing candle. We're down 17% in a month. Next support, 25s. Under 25, what is there? I mean, really, what is there? Like 9s? I mean, 9 is, that's basically 65% down. 65%. We're looking at going down from 39 to maybe 9. And seriously, the question you should be asking yourself was, well, okay, that's the March candle. What the hell is the April candle, maybe May candle going to be? Huh? What do you think they're going to be? This is not good. This is bad. Momentum has just started to roll over. Moving on. Newmont, arguably the best gold mine in the world. January candle, spiky. February pushes up, doesn't get the high though. March candle, look at that, bearish engulfing. That's horrible. 15.5%. What's the next support? 89. Under that, 76. You see that was a spike there. So 76 to 109. That's $133. Question out, $33. $33 off 109 is 31%. 31%. It's not good. Momentum has started to roll over. Pan American Silver, another one. January, spiky candle, exhaustion high. February pushes up but can't break the high. Down 18% on the month. Next support is a 10 MA, 43. 43, that's $13 down, which is what's that, 28%? And under that, if the 10 MA doesn't hold, then what? 35s? That's $21 down, which is 30, maybe 36, 37%. These candles are horrible. Royal Gold, much the same. Bearish engulfing candle, down 13%. Bearish. SSR mining. Now, okay, this one, did this have a new historic high? It may have. Let's check. No, it was just shy of the April historic high, 33.68. But anyway, little spike. You see the sellers came in because they had like a $1.3 billion or so asset disposal, which stock popped, but they've sold into it. And of course, it's being dragged down now by gold, silver going down. Wheat and precious metals, new historic high, 163, but it's already down 14.5%. Support, 10 MA, 115s. Under that, what are we looking at here? Where's the support? There's nothing. There's nothing under there until what? 54. 54. That's what's that? That's 46 and 39. That's $85, right? $85 down. It was 85 on 139. There's a percentage. I don't know. 70%? That's the threat here. That's the threat that the market that we have and we do have a short-term high from January. Well, most of the stocks. I mean, clearly this one did break a new strike high, but we have a full reversal. And if we start taking out the 10 MA, then that's a problem. And I guess the first one that's done that is Harmony. That's the first one I see in my list, right? That's really massively been cut down. And it's going to turn negative as of April. That's horrible. So yeah, those are not pretty. Let's jump to gold, silver. Let's jump to. Let's go through this. Do it this way. So commodity gold on Friday was down $57, 1%. Still above a 50-day, which is something that gold has held since August. Again, the stronger dollar on Friday was a problem. On a weekly chart, the second week low, we were down $122. I will note that momentum is prone to turning negative. It might happen next week, but it's certainly going to happen, well, will likely happen as of Monday, March the 23rd. We haven't seen momentum on a weekly chart turn negative since September. That's a problem. It's a big damn problem. Monthly chart, we're down $255 on a month, 4.8%. That's the biggest that's the biggest red candle we've ever seen in terms of nominal dollars down. Of course, that's because of the gold price has gone up so much. The candle size has been look at relatively look at all this $1,000 just chop. And things have accelerated. And again, look, the January candle, short-term bullish exhaustion. And you see they try to come in February, but nope, they're selling it. And we could, I would accept that we could churn around and maybe even we can do this. That's always possible. We just churn sideways and then resume upwards. It's possible, but for now, um, you got to wonder. 10 MA, 4100s. Let's jump to silver. Silver on Friday had a rough day, down $3.22, 3.8% to $80.60. I mean, you could argue maybe it's some kind of bullish pennant, but it's a real mess. Momentum is negative on Friday. It's not great. On a weekly chart, this is a real problem here. Look at this. I've been watching this for a few weeks now, and momentum settled the week negative, which is the first time since last May, back when silver was $28. 28. But this is a problem because you see they tried rallying it in the early March, and like nope, we rolled over again, and that's a problem. You see, that's basically that's a sell signal on a weekly chart. And you can see a little divergence there, slightly lower high, and now we have a bearish cross. You think how long is this going to go down for? A couple of months? Literally, are we just going to come down all the way back down? Is that little black line going to come all the way down to maybe around here in May or June? Gold bugs don't want to hear that. Silver bugs don't want to hear this, but that's that little cross there. That little cross is a major problem. It doesn't mean silver can't go up for a few days next week. You know, if the I'm guessing the Fed won't cut rates. In fact, that's what the mainstream are thinking, but I'm guessing they're probably right. Um, maybe the dollar will cool back for a day or two, but that's a problem. It's a really big problem. On a monthly chart, I mean, look, January candle, hyper spiky to 121, collapse to 63s. They bought it right back up to where we printed this month, just 26s last week, back down to $80. Well, maybe 2 weeks ago, back down to $80. In fact, what is this? It's almost a bearish engulfing candle. We just need to break under the body of of the February candle. And then look at the Teneme, 59s. That's $21 down, which is 26%. In monthly momentum, look at this. Do you care about that? You should. That's a problem. We have a rollover on a monthly chart. I mean, it was inevitable, right? Can't keep going up, right? At some point, it's got to max out. We've maxed out. Now we're rolling over. How many months could we go down for? Like 1, 2, 3, 4, 5 months? Get us into like the summer. And then maybe we level out again, like we did here. We had an upcycle there, cooled back for 4 or 5 months, turned around, and then we started leaning upwards again. But we're so high, we need to come back down. So it's not looking good for silver and gold and the miners into April and perhaps some months beyond then. Clearly, if the main equity market goes down, which it is on track to do, in theory we should have increasing downside power into the end of the month and probably early April. Then silver and gold and the miners will not be able to escape. There will be no escape. What do we want to end with? Yeah. Do we really care about the gold silver ratio? Not really. Not right now. That's really, to me, that's in terms of the gold mining charts, in terms of individual gold mining charts, that's the most horrible one there is right now. I mean, you could be more conservative and pick Barrack mining or something, but that's terrible. I mean, I could accept that the mid to long term people will hold on, but I mean, the cautious would have had to stop around 17, right? They would have already been washed out. But the concern to people who are going to hold on is, what if we come all the way back down to 7? That's 50% below where we are now. and almost 70% below the high from January. But yeah, I think I'm going to leave you with that chart. It's a problem.